Shiba Inu broke out of consolidation, and this version of the story is all about participation behind the move. This matters because the article does not frame SHIB as a meme-only pump. It frames the breakout as a structure shift supported by volume, higher lows, and a sharp increase in derivatives activity. The tension is whether the supported catalyst is strong enough to survive the first reaction and keep drawing buyers once the easy excitement fades. Derivatives volume ran above $249 million, and open interest climbed towards $64 million. It also described SHIB as breaking above a symmetrical triangle while holding above former resistance that turned into support. For searches like Shiba Inu Breaks, this matters because the article does not frame SHIB as a meme-only pump. It frames the breakout as a structure shift supported by volume, higher lows, and a sharp increase in derivatives activity. Those confirmed details matter because they tell you whether this move came from one headline or from several pressure points landing together. The main resistance zone was framed around 0.000065 to 0.000072. A breakout becomes more credible when buyers keep stepping in earlier on pullbacks and when market participation expands with it. That does not guarantee continuation, but it does tell you the move is not isolated to one thin candle. Open interest is the amount of active derivatives positioning still on the board. That mechanism is the part traders can miss when they only look at the chart. This affects short-term traders who want to know whether the breakout has enough participation to push into the next resistance band instead of failing back into range. This is why the move can look larger or weaker than one headline suggests. In stories like this, the structure underneath the price often matters as much as the candle itself. The unresolved part is whether derivatives positioning stays healthy. Rising open interest can support trend continuation, but it can also create sharp squeezes if price stalls. Shiba Inu Breaks is the phrase tied to this setup, and the unresolved part is whether derivatives positioning stays healthy. Rising open interest can support trend continuation, but it can also create sharp squeezes if price stalls. A market can move before those answers arrive, but it usually cannot keep the same pace forever without them. The important point is that price action and structure are not the same thing. A sharp move can be real while still resting on fragile conditions that have not been fully settled. That is especially true when leverage, concentration, or technical positioning is doing part of the work. Watch whether SHIB can clear the resistance band with follow-through volume and whether support around the breakout level keeps holding on retests. Timing matters here because the next clean signal can separate a durable move from a temporary burst. If that signal confirms the story, confidence can rebuild quickly. If it fails, the move can unwind just as fast. The broader consequence is that traders are not only pricing a chart. They are pricing confidence in the mechanism underneath the chart, whether that mechanism is supply, leverage, collateral, or narrative follow-through. That is why this story matters beyond one intraday move and why follow-through is the real test. Watch whether SHIB can clear the resistance band with follow-through volume and whether support around the breakout level keeps holding on retests. The practical takeaway is simple. Watch execution, watch the key level or flow that matters in this story, and do not treat an early move as proof that the final answer is already known. The market still has to validate it.